If I were to give you 30,000 rupees, what would you do with it? And if I were to give you even more, say 50,000 rupees. Okay, but wait, what if, no strings attached, I doubled that 50,000? Now that would be something, wouldn't it? But I would if I could. I certainly don't have that kind of money. You know who does though? The government of India. And the finance minister announced that you'll be getting a major tax break next year. Depending on how much you're earning, you'll be paying anywhere between 30,000 and 1,10,000 rupees less in tax. And money saved is money earned, as they say. The finance minister and the government are hoping that you'll go out and spend on goods and services. And that will grease the wheels of the economy. After all, consumption is a major driver of economic growth. But where will the money be spent? And which companies will benefit? That's what fund managers and investors as a whole are trying to figure out. This is Money Wise on NDTV Profit, and my guest today has a few theories that should hold you in good stead if you're trying to figure it out as well. Trideep Bhattacharya, the CIO-Equity at Edelweiss AMC, is joining me today. Trideep,
hello.
Hi, Trideep.
How are you?
So, one, were you expecting such a big bang change in the tax laws?
I must admit, Alex, when we were putting the calculations together, we didn't have this in mind. We actually didn't have the extent to which the tax cuts were announced in mind. We thought there could be some general fillip to the consumption, but not in so many specific terms and not in that quantity as well.
So the question a lot of people have been asking since that, and I must confess that in this newsroom as well, and I was listening very closely to the budget speech, as soon as that announcement was made, there was this big cheer, and there's a large number of young people out there in the newsroom as well. So the idea that they'll suddenly have more money to spend is something that excited a lot of people. So
I'm sure.
The question a lot of people are asking is, will people go out and spend? Will they hoard it? Will they save it? I guess it's not an easy answer.
True. So I think first, let's get the context right. So the urban middle class, so to speak, if you look at the people who will benefit from it, would have their average income go up by anywhere between 4 to 8%, which is a meaningful amount. For many of the people, this is the annual salary hike that they get. So their take-home salary, in many ways, if you call it that way, has been given a yearly hike of that much amount by the government of India, which is amazing. Which is why I'm not surprised at the reaction which your colleagues did overall. Now, if we superimpose on top of it that the savings rate of India is roughly about 35–36%, then roughly, at least 60 rupees out of every 100 that's given will probably kind of, get spent. Okay. And there are multiple areas that they will spend, and I'm sure we will kind of get into the ins and outs of it. But yes, roughly about, if you think about 30-70 mix or 40-60 mix, 40 saving and 60 spending, you will not be way off the mark.
Okay, so that's interesting. So irrespective of whether there will be spending in certain pockets or the other, there is going to be more spending. There's rather saving. And so what is the implication of that, Trideep? Do you think, because we're speaking at a time when over the course of the last few months, there has been correction, and it's accurate to call it that in the equity market in India, primarily because of the kind of selling that foreign institutions have done. But some might say it's healthy. And it happened because, again, some might say that the valuations were a little stretched. And they were stretched because there was a lot of domestic money getting pumped into certain pockets of the market. Does that continue to happen?
So two bits to that. One is that, before this, we were in a situation where stock markets were attracting a whole bunch of investments, but banks were struggling to get FDs.
Yes.
Now, with some more money in the pockets, first, some bit of liquidity problem, some bit of deposit problem will get addressed. The second part, of course, is that the markets are somewhere between 10 to 15%, and if in pockets even more, cheaper than when they were, about 3 to 6 months ago. So clearly, opportunities are far bigger than what they were earlier, and hence I'm sure it will attract a certain set of the population to kind of put money to work in the form of savings in these areas. So yes, I'm hopeful it would lead to more money into kind of different asset classes over time. The first bit comes the saving though, then comes the, and that's where the investment kind of, part comes in, and then comes the spending. So there's a time series between the two as well.
And we must remember that while we're talking about absolutes in terms of the yearly number,
Yeah.
it's not something that will come at once.
Exactly.
It's going to be paid out over the course of every month, right?
Correct.
So, okay, so that's one aspect. I will refer back to this at some point in the conversation, but I want to talk about how the spending will change, right? Or will it change? Because the assumption is that if you have more money, you don't necessarily buy the same things. You will move up the value chain and you will consume things that you didn't yesterday. Does that take place, and what are the implications of that?
This, if you ask me, is the nub of the issue. This is what's, for viewers and listeners who are listening to this, this is the crux of the matter. And it is that, if you look at the average age of India today, it's basically 28 years. At 28 years, what did we do? We probably finished education and just got into work. And that was the time when maximum amount of aspirational spending kind of, started to happen. So to put this in context, to put this in numbers, I would say that if I put all of these together, the spending in India will go anywhere from 2.4 trillion rupees or dollars to 4.2 trillion over a matter of 6 to 7 years.
$2.4 trillion to 4.2 trillion over what period?
Over 7 years, over the next 7 years.
From this point?
Yeah.
That's massive.
Correct. So then the question becomes that where will this spend get to?
Yes.
I would argue there is certain level of spending which gets into your eating habits, and the food, beverage and tobacco, which is what we call in traditional language, is kind of almost constant, increasing at the rate of inflation. So that's not going to go up significantly. But what will go up is basically kind of entertainment spend, which is kind of going to hotels maybe a little more than what it were earlier, eating outside in the form of quick service restaurants more than earlier, maybe upgrading the house where one lives in, and there could be multiple areas. These are just 3 examples.
But before we get to that and all of these possibilities, I'm curious about the number and the projection. What is that based on?
So this is a study done by one of the real estate agencies who studied the spending pattern of India and how that will evolve over a period of over the next decade or so, and found that as our per capita GDP goes up from $2,500 where it is currently to basically kind of double the number, double over the next 6-7 years, where is the spending is likely to happen, and what is the quantum? This is the number that came out
over
of that.
Over the next 7 years.
Over the next 7 years, indeed.
And we're talking about a considerable increase also in the what we call now the middle income group, because a lot of people are moving up the value chain there.
Absolutely.
As well. So let's get back to where people are spending, right?
Yeah.
So, and I'm fascinated by the concept that you just described, which is when people are early on in their career, they suddenly get access to capital, and so therefore they're going out and spending certain things, and
Absolutely.
they think about saving later. It was always that I didn't have enough money for me personally. So I don't know about other people, but what are the implications for each group? I guess it depends on what people are doing and what stage of life they are at. And what the implications are. Is that the way you've looked at it?
Yes, and of course, the implications would be different for different age group. But if your starting point is the average age of India, so think about an average individual who is 28 years of age, and how would they spend? You won't be significantly off the mark. So the themes that they would kind of go about and kind of spend on would be clearly things like premiumization. Instead of maybe I don't want to name the model of the car, but maybe a basic model of the car to an SUV.
Sure.
So that's clearly an upgrade.
A hatchback to an SUV.
A hatchback to an SUV would be one clear example of the same. Maybe from 1 BHK to 2 BHK or 2 BHK to 3 BHK, or basically larger houses, so to speak. In the meantime, a lot of people would be migrating from villages to tier 2 cities, tier 2 to tier 1, and likewise. So the real estate could be one of the beneficiaries of the same as well. And finally, the Gen Zs, which everybody is so proud of, quick commerce as an emerging theme, the new way of consumption might expand massively and benefit significantly, and will actually be a catalyst towards higher spending, because here it has kind of brought down the barriers to consumption by significantly at your fingertips.
Okay. of course, there are detractors and people that criticize things. Maybe you can call them cynical. Maybe it is for good reason. I won't judge. But there is one theory that says that a large group of these people that are going to get more money will utilize it maybe on foreign trips. And so therefore, the objective, which is to give more money to people and have them spend, is defeated if they're going to go outside and spend it. Do you think that that's likely?
It's one of the possibilities. So with such a large population, with such a big segment of population, different people will do different things. That's why I named out at least 6 or 7 of them. Some of them might go on foreign trips, but trust me, the tourist destinations in India are also getting attractive, as you can see in Mahakumbh, which is a religious as well as a tourist destination from various different perspectives. So I'm sure, I mean, people do various things, but net-net, if you look at historical examples, the spend in India has significantly gone up in day-to-day life activities. And hence, from that perspective, while some might migrate to other countries, but a lot, I'm sure, would remain within India and will get spent in different types of activities.
Because the number of people we're talking about is quite significant.
Exactly.
Right? And not all of them are going to go to Indonesia, maybe.
Exactly.
Right? So, but let's talk about a couple of these aspects. Let's first talk about housing, because you're talking about at the far end of the spectrum, at the higher income levels, if you have 2 incomes in the household, if they're earning above 24 lakhs each, which is necessarily a minority and people are moving towards that, but you're talking about 2.2 lakh rupees saved over the course of the year, which is a considerable amount of money. Do you think that that would push the needle and get people to spend on a house, or do you think that it may not, but then it'll increase the propensity to spend on something like a house?
So 2 bits. One, I think that level of that salary income that you're talking about will probably first migrate from rented accommodation to owned accommodation. That itself would be a kicker with regards to from a real estate perspective, and then kind of maybe a slightly higher income bracket would probably move from a smaller to a larger accommodation overall. Certainly, what we see is the real estate is one of the or second or third most important areas people want to save for. So I'm sure certain part of the population would kind of go into this, but I see this more as an upgrade opportunity, where people kind of from rental to move to kind of owned house, or from maybe a smaller house to a larger house. Something that we have been seeing anyway will probably get accelerated by this.
So the reason I asked you this question is because you've seen premiumization even in the housing space, and at least in the urban clusters, right? You're seeing that your ultra luxury, there's tremendous demand, but there's not so much in the way of affordable housing that is taking place. Does that change? Do people suddenly go out and say, okay, you know what, I have more money, I'm going to go out and buy a house, even if it takes me about 15, 20, 25 years to repay it?
Yeah. So I think this will take a bit of time to kind of come through. I think there are 2 aspects that we talk about. Eventually what will happen and what will happen at what period of time. My sense is first would be kind of, low ticket spending.
Sure.
To kind of, maybe taking a few holiday destinations or eating outside. And then over a period of time, this would lead to, particularly in the segment of the population which is at the moment witnessing a slowdown, which is urban consumption. It'll ultimately kind of lead to a better housing standard for them, maybe reduce the distance to work, and those kind of things will actually start to come in. The point I'm trying to highlight is in the time series of when things will happen, first will probably come the low ticket or the mainstream consumption, then will come the housing kicker, which will happen over a period of a year or 2.
Okay, so therefore I'm trying to gauge the way that you're responding to this and how you are building your own portfolios, because as a fund manager, obviously, you have to be ahead of the curve and you have to see these things coming. Based on the assumptions that you've made and the expectation that people are going to go out and spend on the smaller ticket items, and that's going to get a fillip, which pockets are you focused on to take advantage of that?
Sure. So I think 2 parts to this. One is what we call as core. If you sort of think about consumption and put them into 3 buckets. One is the core consumption, which is basically the staples, what we eat day in, day out, that ain't changing too much of a lot, right? There's probably grow at the rate of inflation or maybe slightly lesser than that. What's interesting is the emerging consumption or the new discretionary areas, which is where we would see a lot of demand coming through. Low ticket to high ticket, from maybe eating out to maybe TV, fridge, consumer electronics. That's the range that I'm looking at. Would probably see somewhere in FY26 as more income kind of comes through them, benefit from them immediately from this. And then thereon would be the real estate benefit that will kind of start to come in. So first, maybe consumer discretionary, and then real estate in that order. Might I want to add on top of that something which has not yet happened, but should there be interest rate cuts, which we certainly expect through the course of the year, then that'll add a bit of a fillip on top of this, particularly when it comes to real estate.
Okay. So let's talk about how you're determining which company stands to benefit, right? Because ultimately you're talking about a space that traditionally has attracted higher valuation multiples in the consumption space, because these companies are so front-facing, they're known by so many people, and as a result of which this growth story in India has been talked about for quite a bit. The expectation that there's a growing number of people that will consume these things. It's a discovered opportunity. So how do you go out and choose the companies that will give you the most bang for your buck over the course of the next 5-7 years?
Sure. So I think, first of all, consumption has not really been the area where most people have gone gaga over in the last 3-4 years.
Yeah.
It's been more manufacturing. Yeah, it's been manufacturing. So in that context, if you look at some pockets of consumption, not everyone, but some pockets of consumption, I would argue the valuations there are lower than what you've seen in the last 5 years. So that's a good starting point. Second, if you think about the earnings drivers for the companies in here, all that we talked about in the last 15 odd minutes go on to show that at some point, it may not be immediate, but maybe in this 6, 9, 12 months time basket, we will see some sort of earnings improve for these companies, for consumer discretionary companies over a period of time. As that stands to happen, we gradually see earnings improving in the sector. So usually, valuations being less than median, earnings improving is a good place to start, and that's probably the reason why we called out consumption to be the dark horse of 25 when we started the year. Of course, the budget put a bit of a fillip on top of that. So just to close this out in terms of how do we go about selecting companies, following the same framework, wherever valuations are lower than what they have been in the past 5 years, and we see earnings improving over the next 1 to 2 year time bucket, we don't mind the first 5-6 months, which will be weak anyway. But as that improves over a period of time, slowly but gently, we'll kind of go into those stocks or areas which will mostly be in consumer discretionary as part of our portfolios.
Okay. We've seen disappointing earnings, Joe.
Yeah.
Though, Trideep, and I take the point, 5 months is what you're comfortable with,
Yeah.
but you must have some estimation or some idea of what you think earnings will look like, which is why you're basing these assumptions and you're making these decisions. What would you be comfortable with? What's your base case assumption, and what would you be very happy with? What would you be disappointed with?
Right. So I think, first of all, to set expectations right, nothing is going to change immediately.
Yes.
And when I say this, we are obviously seeing the December quarter numbers come through, which shows a weak festive demand from a consumption standpoint. March quarter will not be significantly off.
Sure.
Starting June quarter is the first time when we will start to see some signs of it. So for me to count on it, the first chance that I would see would be festive season this year. And the spend that happens that time, and hence maybe Q3 this year is when we would look to see some
calendar year, say.
Calendar year.
Yeah.
When we would look to see the fillip with regards to consumption demand starting to or showing signs of coming back. That's from the urban consumption side. But also, mind you, that starting with monsoon last year, the rural part of the economy is gradually on the mend as well, which will also start to show up in the numbers sometime in back half of FY26. These put together, my sense is you would start to see double-digit earnings growth come through towards starting the back half of fiscal year 26. A low double-digit is something that I would kind of look to see happens. If it turns out to be on the higher side, we'll happily take it.
That would be a bonanza.
That would be a bonanza, exactly. But at the moment, from a point of view of growth rates which are sulking, this is factual. So Hindustan Unilever reported a volume growth of 0%. And as we go towards the back half of next year, we would certainly see even that growth rate improving from where we are. And that means
also because of the low base.
Yeah.
Also because of the low base.
Correct.
But you mentioned interest rates. Looking at this, one would assume that if we're talking about an increase in consumption, you would automatically have an increase in inflation, or at least certain aspects that will be inflationary. And so from that perspective, for a central bank that is targeting inflation, it becomes hard to justify a dramatic reduction in interest rates. Do you think that that will be a bit of a dampener, or do you think that the base case assumption as it stands of a 50 basis point rate cut in this current cycle will still take place?
So I think all that you said will be true, yet 50 basis points might actually just about happen. Okay. So I think, and simply because we are sitting on a base of high inflation, on that base inflation will look incrementally coming down. Even though at the base level, the incremental inflation would be on the higher side. But still, Y on Y, it will start looking a little lower. And that will probably set the tone for up to 50 basis points rate cut this year, this calendar year, I mean. Also, given what happened in the budget, where I think the Honorable Finance Minister showed that we are fiscally responsible with fiscal deficit target at about 4.4% of GDP, it leaves the room for monetarists, for monetary policy to be a little loose because you are fiscally tight. And hence, I think a combination of dropping inflation and fiscal tightness makes me feel that up to 50 basis points rate cut is certainly on the cards this calendar year as well.
Okay. Rate the opportunities as you see it right now, with the budget now in our rearview mirror, heading into the next financial year and possibly the next 2 or 3. First, consumption. 2, infrastructure. 3, defense. 4, manufacturing. How would you rate them? How would you rank them, and why?
So I would answer this question slightly differently. Before we got into the budget, consumption was nowhere in the picture. It was all about the second 3 that you talk about. Now, these 2 are the 2 balances of the scale. So now all of these are on even keel. In fact, that is the hallmark of Modi 3.0 is what I wanted to bring out. That Modi 2.0 and Modi 1.0 was all about capex and hence manufacturing-led growth. Modi 3.0, it's a balance between manufacturing and consumption. That's the difference. And hence, now consumption clearly gets up the scale. That doesn't take the sheen away from manufacturing. We are still talking about a 10% growth. I think the valuation excesses needed to correct on that, which is in the process of getting corrected. And over time, it's a more stock pickers market where opportunities are there in manufacturing as well as consumption. Now we have to do the hard work to figure out where the valuations and growth are more in sync. So not an easy market anymore, but a wider market for sure.
As somebody that is, and this is my last question to you, since we're talking just about a week after the budget, or less than, as somebody that has seen so many budgets, is this the budget that you went to sleep after with the biggest smile?
I think probably from a consumption standpoint, yes. This is I think to me, if you really ask me, this budget kind of nails the nub of the issue, which was basically a slowdown in urban consumption. And hence, it's a fairly balanced budget if you look at it. Only capex budget would have probably pleased some part of the market, but left a whole lot of other part unhappy. And I'm happy that it has left a more equitable sort of opportunity for different sets of investors as well as people on the market. So yes, happier than what I was before.
It's been an absolute pleasure having you in the studio. Thank you so much for speaking to me.
Pleasure.
And that brings us to the end of this edition of MoneyWise. Tell us what you think on any one of our social media platforms, and do stay tuned. There's lots more coming up over the course of the day. This is NDTV Profit.